Hope you are doing well. Today is our first deep dive series into a fascinating topic. El Salvador is the first to adopt Bitcoin as legal tender. If you are not aware of legal tender, feel free to learn more at the card above. El Salvador is a relatively small and developing country in Central America, well known for its coffee and never won any medal in the Olympics. Still, it might sound irreverent as it makes headlines in history as the first sovereign country passing a law to recognize Bitcoin as an official legal tender. This is a huge deal that potentially rent lots of legitimacy that cryptocurrency could be, well, a currency. Still, as far as from the surface that it goes might be less than ideal for a few reasons, we will explore this episode. We will be looking into the pros and cons. The country has barely functionally currency to start with, so it might be challenging to truly gauge the success of the program, and being the first surely catch lots of eyeballs and publicities in this tiny nation. The government even offers Salvadoran citizenship by investing as little as 3 bitcoins. All this sounds like a resounding endorsement of Bitcoin. Several billion cryptocurrency markets didn't seem to react much to the news. To understand what this all means, we need to ask a few questions. Why would the government of El Salvador adopt Bitcoin as legal tender? What challenges can be expected with this new system? Why didn't this boost the price of Bitcoin despite the realization of the currency's core goal? Perhaps most crucially, what could this move teach us about inflationary fears of the US dollars? So, the first thing to understand is that El Salvador isn't given up their currency to do so. That doesn't seem they don't have a national currency. They do, is the El Salvadoran colon, but it is rarely used. In state, since 2001, the country overwhelmingly used US dollars, which welcomed from the government that willingly adopted the foreign currency by honoring the exchange of $1 US to 8.75 Salvadoran colon that still stands today. This is nothing new. See Zimbabwe, Somalia, and recently devastating in Venezuela, forced into dollarization, their currency basically worthless papers due to hyperinflation. El Salvador is a bit different. They choose to, but why would they be willing to give up their sovereign currency? Well, there are a few advantages for small developing countries. For starters, it's cheap and cost-effective. The U.S. spent $877 million on printing, storing and transporting cash to Federation Reserve. That's drops in the bucket, but those costs start to add up to El Salvador, with a GDP of $27 billion. Another reason, dollarization make it more attractive to foreign investment. There are many risks when investing, but one that comes particularly critical when investing internationally is exchange rate risk. For example, if you invested $1,000 in a company located in Brazil back in 2011, their stock price increased threefold over 10 years, you will be pretty happy with the return, right? At the same time, you will be shocked when I tell you that the Brazilian real failed by a value of 66% over the same period. This makes your investment a barely break-even deal. This is a foreign exchange risk. So you see, it's easier for El Salvador to use dollarization than to deal with the foreign exchange risk and uncertainty involved, like taking a long time to proceed with remittance. So was this effective in attracting foreign investment into El Salvador? Well, not really. That is not because dollarization backfired, but more El Salvador was plagued with crimes and corruption, so it wasn't an attractive destination for investment no matter what currency was in circulation. Dollarization did start to cause severe shortages. El Salvador is a small and dense country, need to import more goods and services than its export. This is called the balance of trade deficit. Many large countries also have massive deficits, but it is a problem for a small country that doesn't control its currency. The El Salvador government is not allowed to print US dollars. As the country continues to exchange more dollars, it will run out of money. So how? The nation has the most prominent foreign workers, mostly in US, every month, hundreds of millions of dollars in smaller amount remittances transactions. This also brings another problem surface. Remittance transaction fees take a considerable chunk, and their families receive less. This may not sound much for average Americans' wages, but it means lots for workers earning $8 an hour. This is where Bitcoin comes in, and it is hoped that this cryptocurrency can accommodate borderless income for workers aboard. Of course, Bitcoin still has inbuilt transaction fees, but these are much lower than most banks or financial institutions for a similar transaction. Beyond offering a cheaper remittance, Bitcoin is another point to attract foreign investment. Dollarization may not be the winner the country was hoping for, but maybe cryptonization will be. With the offering of citizenship with only 3 bitcoins, El Salvador may be the first country on earth to memes its way to prosperity. Only time will tell. Chances are, the news will be faded away in a couple of weeks, and nobody having bitcoins is going to make themselves at home in the murderous country of the world. Realistically, the market knows about this. That's why it did boost the price of Bitcoin, at least by the time of this video. There's also learning to be learned here, how inflation works. Inflation has been big news in recent months, but unfortunately, there's still a lot of misconception about what this term means. We plan to make an episode on this. Comment below and let us know if you are interested. A classic mistake often seen is people think that inflation their money become worth less, which technically wasn't correct. Inflation is the rise in price in goods and services since those paid using money, so concept the worth less is fine. Especially regular people want to know how inflation affects them daily, limiting your understanding as an economist. The best example of this is since both El Salvador and US use US dollars, doesn't it means both have a similar inflation rate? They don't. El Salvador has a noticeable lower inflation than the US. This shows that the currency itself isn't the only thing at play here. Understanding inflation will well serve you when you deep dive into these issues. Even beyond this, a national level of the inflation rate is also a bit misleading as vary city to city or state to state. Hopefully, you learn new knowledges and will be walking away with a better understanding of El Salvador's Bitcoin story and inflation. So, will there be any more countries that will possibly follow El Salvador's path? There are 2 potential groups. First, small countries that don't have their own currency and use US dollars as legal tender. There are 8 more countries like Ecuador, Zimbabwe, East Timor, the Marshall Islands, Palau and Micronesia. They may or may not have the same motivations as El Salvador, such as a large community of foreign workers that need to save on remittances fees, but all of them surely wants to attract more foreign investors. El Salvador's success story will surely play a key consideration factor. Second group are those countries facing hyperinflation crisis such as Venezuela, Sudan, Lebanon, Argentina and Zimbabwe again on the list. Most of them have own currency except Zimbabwe. Will Bitcoin adopt as legal tender in these countries? Perhaps not anytime soon, but only time will tell. Paper money is worthless in these countries. Everyone are millionaire, but goods are so expensive and unaffordable, even used to make handbag and crafts. Turkish lira is the lastest on the list. People are suffering after saving up for their whole life but holding bags of worthless paper money after retirement. This is much disgrace and sad. People are moving rapidly to cryptocurrency as a self-saving measure. Hope you enjoy this video and find a valuable takeaway. At BitWise, we can't stress how important risk management is. Diversification of your portfolio is absolutely paramount. Please don't put all your eggs in one basket, either in real estate, savings, bonds, stocks, funds that are based on the fiat system or even the government, as all may change anytime. Mismanagement and corruption are going to disappoint you. It's important to learn to manage the risks, not to debase, but history is full of breaches of that trust. We don't have the crystal ball, but surely the financial evolution is inevitable. Thank you for watching. Please consider subscribing, liking and sharing is caring. Interested in investing in cryptocurrencies and owning a piece of the future of money? Then I have good news for you. All you need to do is download the Luno app. Luno is the first cryptocurrency exchange to get licensed and regulated in Malaysia by the Securities Commission, so you're safe to use it. Once you have downloaded it, go to the rewards section and type this unique reward code, NUB8XT. Once you do that, you can deposit and buy cryptocurrency. Purchase a minimum of 250 ringgit of any cryptocurrency, and you will receive a 25 ringgit reward of Bitcoin. Just make sure to key in the code before any deposit and purchase. I will leave a link also in the below description. Once again, a quick disclaimer that nothing in this video shall constitute financial advice. You are responsible for your own financial choices.